Good evening, crew. My name is Daniel Young. I am the owner and founder of Adaptive Perspective and the Adaptive Perspective social media platforms. And I am back to talk about our stock market investment strategy utilizing closed-end funds. So to get the normal disclaimers out of the way, this is an unedited video. I mean, who knows what you'll hear in the background as I film these in my house. In theory, you won't hear much because I think everybody is cloistered away behind a closed door, but we'll see. And then I don't speak like the herd. I walk in limited company, and sometimes I walk alone. So the full system update is this. Of the three books, the primary book is almost done, which is really good positive news on my end. It's taken a lot of work. It's taken more time than I would have initially envisioned to really go through the edits and the fine tuning, but it's almost done. And that would lead me into the specific closed-end fund strategy, and then also into a specific scholarship and investment property strategy, which relates to the stock market eventually, but not initially. But I digress. Um, but as I reflect on making this video, really, as I reflect before, I guess, making this video, there's always so much more to finance than just investing in the market. And I love these videos. I love how they challenge me to really sift through the news weekly and to really say really a lot, but to sift through the news, but also to process and analytically think about the news and how it relates to the present conditions and the coming market, or what could happen in the coming market. And as we look at say if we as we look up investments for the coming week, it's really a snapshot into one particular area of our finances. And the more that I read in finance, most people don't talk about everything. But I think that's what's missing in finance. The most notable quote I hear about the outcomes of our decisions are that people only see the outcome or the end result of our decisions. They don't see everything that goes into it. They don't necessarily know the initial problem. They don't know all the options. They don't know how much time and effort and research and prayer and searching that you put into solving a specific financial problem. They only see the outcome. And I think we do ourselves a disservice, but I also think we do each other a disservice in that we don't talk about all the other stuff because, quite honestly, we grow better when we interact with other people. That's not to say that other people make our decisions for us, but it's generally better to have more than one point of view. And your point of view, even if you cast it into a mirror and reflect it back, is still just your point of view. It's always better to have somebody challenge your ideas, even if you can advocate and prove your reasoning, you're still having to do it against somebody else's questions. And it's what I'm not necessarily what I'm missing in finance, but it's what I'm missing when I read all about finance. And it's what I want to create. I started it with Facebook and try I made a group I couldn't find. And it's what I want to continue wherever I land. But I want to look at finance as a whole. I want to look at all the different parts. I want to share my life and my maybe not issues, but my struggles and what we're facing. So to be frank and honest, of what's been weighing on my mind, maybe not weighing on my mind, what's been ever present in my mind today. Excuse me, a cough I can't get rid of. Um, That started the day. But we have two daily drivers, a 2008 car and a 2010 car. The 2008 is experiencing the wear and tear of the age. It's got 174,000 miles, pretty much needs a new front end suspension. At the dealer would cost about 5 to 6 grand. With a private mechanic uh, who does not charge dealer pricing, would be about 2 grand. But it's an 18-year-old car. So do we really want to spend 2 grand on a car that might be worth 5 grand? Um, yes, my daughter's about driving age. It could be a great car. It could last another 150,000 miles if we took care of it. Yes, completely agree. But it's still not, it still might not be the best thing to do. I mean, she doesn't start driving for a year. She goes to the school where I work at. She doesn't necessarily need her own car because we go together every day to school anyway. Um, and then this year, and if you didn't know, this year there's a specific tax credit on you buying a new car. So, and that doesn't mean a new car like a 2025 or 2026 car. That means a new to you car. Um, but there is a specific tax rebate on you buying a car. So that's a consideration. And in the 2010 is yes, is running fine, but at the same time needs new tires and rims, and it needs new tires. And because I have a warped rim, it will hopefully I'll find a way, but it might need new rims. So there's, 2 grand for truck tires and rims right there. So if I don't say this and I don't give you all the background, all you have to understand or all you have to go on is what I ended up spending money on. And then you can be judgmental because let's be honest, we're all looking at everybody else's ways of spending money and going, I wonder why they did that. Or some of us might think, man, that was a really stupid idea, but you don't know the whole story. And I wish more people were willing to explain the whole story. And I completely realize that I didn't tell you everything in what I've told you as is, but I've told you probably 70% of my problem right now. And a lot of you could reply back and say, hey, have you thought of this? Like you could rebound ideas to me or reply ideas to me in the comments. And you would still, right, contest or support or add on or inquire or however you want to say how we're going about fixing our issues or fixing our car issues. um, and that exposes me to a lot of who knows, kind of like random advice. You when you ask open-ended questions, you tend to get, no offense, you tend to get a lot of vomit back. People just like spill their guts on you. And sometimes that's helpful and sometimes not. Now, nobody likes to be vomited on. That's not my point. But when people just spew information back at you, sometimes you learn some important info. Sometimes you get info you didn't need or didn't know you needed. Uh, Sometimes you get just a lot of random crazy comments. But I wish there was more sharing about finances. I wish people were more open, honest, transparent about the struggles they're having with finances, not as a point of contention or shame, but in the perspective of we can always use more advice. We can always use help in trying to figure out a best course of action. And I mean, I only know what I know, and you only know what you know, and you only know what I tell you in the sense of people only know what you tell them. So when you're offended that no one at work said happy birthday, Did you tell them it was your birthday? People only know what you tell them. And if you're not willing to tell them more, it's really hard for them to be more interactive with you. So, whatever I end up creating, I want an interactive environment. And I want to talk about the stock market and I want to talk about investment property and college student scholarships and having an emergency fund and how we can help each other. Like there is a specific process of engineering your financial freedom. And yes, everybody's is going to be different. Everybody's level of comfort is going to be different. But I want more interaction. I want more. I do. I want a more interactive environment. I want a more transparent environment about here's what I'm facing. This is my struggle. Is there anybody there who can offer me some sort of clip blurb of wisdom that will somehow transcend my issue and help me better figure out a solution to my problem? That's the goal. It's honestly the goal of these videos. I hope they're interactive. I hope I say something that piques your interest or challenges you or makes you go, what in the hell are you thinking? To where you can respond back. Like I like the comments. I like the interaction. So stock market wise, we do have quite a bit to get through, but I hope to streamline it considerably, or at least I'm going to attempt to streamline it. Um, a, Not a lot happened last week, but at the same time, there's quite a bit going on in specific things that need our attention. So here's the week in review. The economy keeps chugging along, and markets ended pretty flat overall. The government shutdown is over, but the herd is still running scared. GDP is pushing 4%, AI adoption is accelerating productivity, and yet the herd continues to scream AI bubble. So are AI focused companies overvalued? Yeah. Is new money still piling into the bloated tech market? Yeah. But none of that's new. So why the panic? Honestly, I don't know. Herd investors are reactionary by nature. The market spikes and they pile in late. Somebody whispers bubble and they slam on the brakes. The market dips and they panic again. But none of that is new behavior. Bubble fears come and go. Twitchy investors spook easily. That's the cycle. And I would frame it with this metaphor. Where I live in my neck of the woods, we've got rice birds, but it's not like a single simple flock of rice birds. They form these massive rolling flocks, like tens of thousands of tiny black birds that shift and turn like a smoke cloud. They pivot on a dime for no obvious reason. And are they chasing bugs? Are they flying scared? Who knows? And the stock market herd is the same exact way. A flash of fear, a shadow of what if, and they scatter. It's worse than turning the lights on with roaches. It in the herd is they are skittish lately, more than normal. But they're not strategic investors. They are fast money hunters chasing overnight pops. They have no long-term plan and they have no structure. So why did they spook this time? I really don't know. And at the same time, it doesn't really matter because when they panic, we look for opportunity. And when fear hits, when their fear hits, and when it grips them and they run, prices drop and discounts widen and the yields rise. And those high quality funds that we all want, they get cheaper. So the herd freaks and we benefit. And that's the part they never see. And they just don't understand. In the closed end fund corner of the market, yes, overall, the broader market stayed flat, but the closed end fund market had a bigger wave to it. And that's normal because the smaller pool amplifies volatility. So just like a wave pool with too many people, or just a smaller wave pool with the same wave generator, you see a bigger wave to it. And in an ultra conservative investor mindset, which is the closed-end fund market, you mix in the occasional herd follower who chases the bigger brand name, Pimco, Double Line, anything Mario Gabelli, right? So in that corner, smaller pocket with the ultra conservative and the herd, you get exaggerated motion. But the simple question is this: it's which funds are positioned for the market we're in and the one we're heading into. And yes, I still expect rates to drop. But why? Like why would rates drop? Seriously. And on your end of things, I hope you think about these things. So from your end, why do you think rates would drop? On my end, this is why I think rates will drop. AI isn't taking jobs. It's eliminating the need for people to perform certain jobs. That trims hiring, cools the labor market or slows the labor market, and puts downward pressure on rates. But I'm not expecting a spike in unemployment. Immigration flows have reversed for the first time in decades. ICE is exporting people faster than they're arriving. That's tightening the labor force in ways we haven't seen before. In my lifetime, I haven't seen that before. That's how long it's been and how big of an immigration problem we've had. And at the same time, the government shutdown exposed how bloated SNAP has become. Now, you and I know this. You and I know that SNAP is bloated and was due for a severe gut, right? A severe gutting or a severe gut check. The broader country did not. But now that got exposed. And a lot of people who didn't actually need assistance were on it. And if those numbers decline, which I think they will, you'll see more people return to the labor pool. So, yes, AI is reducing headcount, but the supply of workers is rising. That creates slower wage pressure, not mass unemployment. So, slower wage pressure equals a lower inflation risk, and that equals lower rates or rate cuts. And once Powell is out of the chair, I expect a more cut-friendly Federal Reserve. But what didn't make headlines, but should have made headlines, because it impacts everything. And this is from Redacted Invest, between January and August of this year, the U.S. housing market posted the lowest turnover in at least 30 years. Only 2.5% of homes changed hands. Just 25 out of every 1,000 homes. 2024 had the fewest existing home sales since 1995, about 4.06 million units. Why? High mortgage rates, high grocery prices, high everything. But also, millions of homeowners refused to give up their 2 to 3% mortgages. That alone kept 1.5 million homes from hitting the market. So the easiest thing for me to do to cut my expenses would be to live in a different home. But there's a lot of expense that goes from moving. There's also a lot of expense goes from covering the cost of a new home. I could downsize into a smaller house that's currently overpriced and with a mortgage rate that's at least 2 to 2.5 times what I already pay. That doesn't make sense. So people are staying put, but we're accelerating to a rental nation. And yes, in that, President Trump proposed a mortgage option, which is crazy on premise. But let me explain. So I love Trump. Like, I love President Trump. I read a book of his when he was a real estate mogul. I love the guy more now. And as a property investor, personally, The idea of a 50-year mortgage rate sounds attractive, but it's not good for the average American. But if you've watched President Trump negotiate even once, you know exactly what he did. He always anchors his negotiation with an extreme position so that the deal lands somewhere favorable. But that's what you do in negotiation. That's what most people who have no idea of negotiation or running a business don't understand, which is the majority of America and which is the majority of the herd. In negotiating, and how President Trump negotiates from his position of power is to throw out this crazy idea that everybody else goes, "Oh my gosh, that's crazy." And then you watch it scale back into an idea that might have been crazy initially, but since he threw out the first idea and then everybody piles in, you scale the idea back, you end up, it's still a crazy, what could have been a crazy idea to start with, but in relation to a 50-year mortgage, it sounds so much more palatable to the average person. So, from my angle, the 50-year mortgage is not the goal. It's just a negotiating tool. You say something big, you get everybody talking, you put smarter ideas into the room. That's very classic Donald Trump, very classic President Trump. But the bigger point is this, right? The herd will panic over the AI bubble, which isn't a bubble, but won't panic over the fact that America is becoming a nation of renters. They react to the small and ignore the structurally big issue. But again, if they were aware, they wouldn't be in the herd. On the stock market side, the investment bottom line is this: the targets haven't changed. Bonds and bonds proxies are at the top because the rate environment is shifting in our favor. AI and tech outside of the big guys because the next wave of winners and the existing wave of winners won't be the usual suspects. NVIDIA, Microsoft, Google, Meta, or I guess Alphabet, Meta, Amazon, those guys are going to grow, but we're going to see the most growth in the small to mid cap guys. And then third is end to end energy. AI needs power, data centers need power, and they need cooling. So they need one, power generation, two, they have to cool all their data centers. And the US grid as a whole needs a complete overhaul from production to transmission. That's long term, unavoidable demand. So, yes, the market's noise is there, and it's always noisy. To be honest, it's always noisy, but you've got a cough I can't get rid of. But the market noise in the herd, that's temporary stuff, but the opportunities are not. It's still the same stuff. It's use the herd's fear to your advantage and see a bigger picture than tomorrow. That's really what it boils down to. The herd is going to panic. You've seen it time and time again. So use it in your favor. Scoop an amazing deal in today's market that will be an even better deal in tomorrow's market. So here's the spreadsheet. And honestly, it's probably the easiest pick I've made in a long time, but I'll show you. So this is, lines 4 through 46. This is the spreadsheet. And quite honestly, I'm not going to filter it down beyond this. So this is everything that made the cut of a triple target for the week. The ones in premium don't look like discounts, but they are in perspective. So yes, it's at a 12% premium. So you're paying $1.12 for every dollar invested. But compared to normal, you're actually getting it on an 8% discount. And that's kind of the track record, honestly, for PIMCO funds. They've got a couple funds that aren't in premium, but for the most part, their funds are in premium. So yeah, typically at 3.88, currently, there we go, below 3. Same thing for PIMCO here. and then we scale up from there. But if I'm looking at the top, and in this market, really in any market, but if I'm looking in this market, I'm going to demand a discount. I'm going to want a monthly payer unless there's a good reason for taking a quarterly payer. And in this case, there's not. ADX doesn't make the cut this week. ASG and USA both, which, yeah, back to back. ASG and USA both, their ex dividend date was 2 days ago. So if you buy it today, you will not get the next dividend in January. You'll have to wait until March, which that's a really long time to wait for a dividend. You can do it if you want, but that's not me. So I want to demand a monthly payer. So I'm going to demand a significant discount. I want a monthly payer, and then I want the best dividend I can find, the best deal I can find. And just because it has a great dividend doesn't mean it's a great deal. Now, the new fund, HERZ, HERS, for Herzfeld, is the rebranded Cuba fund. They pay one of the highest dividends currently, but they actually have nothing in the portfolio. So I really don't understand how they're covering the dividend when they have no assets. It's just cash. Um, when I initially bought Cuba, I bought it for the dividend and how I thought the market would go. And then the market went a completely opposite way. And they still paid a fat dividend, but every single week I got to watch the share price fall. So that when we finally sold it, we collected a lot of dividends, but it wasn't worth much. Um, so just because it pays an amazing dividend doesn't mean it's an awesome company. It still depends on the overall management. But of the list here, I mean, HFRO and HLB are run well. They're structured well from my standpoint. But the CLO market is skittish and erratic as the herd is right now, which I think that's also why the CLO market is so erratic, is because the herd's involved. But the CLO marketplace right now is crazy. OXLC still pays a great dividend. I mean, yes, it pays an almost 34% dividend, but since they did their like their reverse share buyback, the stock has just dropped. And I haven't sold it because of just the overall loss. It transferred in at 20 bucks a share ish. Now it's at 14. My hope is that with ongoing rate cuts, the CLO market stabilizes and we see a return for all of those guys. But as erratic as that is, like I'm all for being where nobody else is completely. But at the same time, that's a little too erratic for me. But honestly, I think the easiest pick here is this. Like, and yes, look, they're all great. Like they're all triple targets. I mean, we could screen them, right, for 9% plus. There's a lot of great deals. But FSCO is from my standpoint the best deal. It's it's a bond company, but it's really a private lender. It's cough. It's a bond company, but it's really a private lender and it's wrapped in a closed-end fund wrapper. And if you want to read a good Brett Owens article and you're not a member of his contrarian income report or his contrarian outlook um, service, you can find his most recent article on FSCO through Forbes. I mean, all I did was type in Brett Owens, BRETTOWENS FSCO, and this popped up first on the list. And it's a great article. And I'm not going to show you more of the article because if you really want to read it, honestly, you can find it and scroll down. But it's a great article on why FSCO is an amazing deal right now, which is pertinent because, I mean, one, it backs up what I'm saying, but two, it is just a really good article. But it's just man, as a BDC in the existing market, and then with a falling rate market, lending to that middle group of investors who need financing, FSCO is well placed now and in the years to come. And they've been supporting the dividend. So when we initially bought it, it was at like 6 cents a share. They've had two dividend raises. And quite honestly, they could add another. So, and with the price dip, thanks to the herd, I mean, the price fell maybe 30 cents compared to last week. But yes, it's cheaper than it was, right? But at the same time, the dividend. So this or the yield. So the dividend has stayed the same. The price dropped, which means your yield on the existing price goes up. So quite honestly, that's my pick for me. Like that's my only pick for the week. Um, that's just the best deal overall. And quite honestly, it's thanks to the herd's fear that it's right there, just kind of waiting for somebody to buy it. So that's all I have for the week. Um, we covered a lot. I gave you more info or hopefully more insight into my world of finance and what I'm facing in my kind of current financial dilemma. Like, what's really the best way to go with this? And uh, I've I've involved what Robert Kiyosaki would call a board of directors. There are people that sit on our it's like at a metaphorical imaginary table. There are people who sit at our financial table who offer us advice on pick a problem. And that doesn't mean they it doesn't mean that their opinion forces our reaction. That would be herd style. But we get their insight and we weigh the options and then we make our decisions. And sometimes we agree with our advisors and sometimes we don't. Currently, my advisors are split. Uh, one advisor said, yes, it's probably a great idea to level up your 18-year-old car. And another one said, I would think about these things. And on my end of things, I will break it all down logically. I will look at the data. I will look at the cost. I will, quite honestly, read my Bible. I will worship for a while. I will pray about it. I'll probably sleep on it at least another night. And then I'll make a choice, right? It's a really tough decision. And my choice can be different than your choice, right? Like your finances are your call, and you've got to do the best thing for you and your family. We can be faced with the same exact conditions, which really doesn't happen, right? But if you had you and me lined up facing the exact same field of everything, we could make different decisions and it would still be okay because we would still be doing the best things for each of us. But quite honestly, that's what I'm missing in the world of finance. There's not a place, at least, and if you know of one, I'm all ears. But I don't know of a place or a group where you can go and really talk about like pulling the sheets back on your real problem, right? Like if I passed you in the hallway and I said, "Hey, how are you?" and you said, "Oh, I'm great," because that's what everybody says. But I want something more than that. And not like, oh, things are hard. I want more than that. I want interaction. I want commentary. I want to help people, but I also want a I don't want to say band of brothers, but I want if we look at it nautically, like I am the captain of my ship and crew, and you're the same. You're the captain of your ship and crew. I want a not a chat room, but I want a space where we can all meet and have like kind of like a yacht club, where we can all come together and talk about whatever it is that we're facing, and you can get some real interaction from somebody else, whether it's me or five different people. But I want that type of interaction where you can bring a problem and somebody can say, "Yeah, I did. I've faced that. I know what you're. I know I know what you're feeling, or at least I felt similar. Here's how I handled it. It was really hard, but it worked out." And somebody else can say, "I faced the same thing and I did it this way and it didn't work out and it sucked." But that's the thing. You have to be willing to be honest with people. You have to be willing to talk about your failures. I mean, the vast majority of the time, you learn best when things don't work out the first time. And it's not a failure in the sense that it's an ending. It's a failure in the sense that it happened and it didn't work and you kept going and you learned in the process. So now that that event happened to you, I would love to give you a place where you can then tell somebody about it and help somebody else have a better outcome than you. And I haven't found that space. So my goal is to make the space, but we'll see. So if you like my commentary, if you like my ideas, if you hate my ideas, if you want to offer me comments on how you would go about resolving my car dilemma, or my pick for the week in FSCO, or you had a bad experience with Brett Owens in the past, or whatever it is that you want to say, by all means, comment on the video and offer me some feedback. If you like the video, like it. And if you thought it worthy enough that you would share it with somebody else, then by all means, share it with somebody else. So I wish you a great week. And in saying that, that sounds really typical. So I wish you a fantastic week in whatever it is that you're currently dealing with, or whatever it is that you're currently struggling with. I wish you success, but I also wish you a breakthrough in the sense that you can really make some progress on that. And if you want some feedback on that, reply back to the video and I'll figure out how to get in touch with you. And we'll figure out how to have a good conversation about what it is that's bothering you, and we can bounce some ideas off each other. So I wish you a great week. I wish you a successful week. And I wish you progress in whatever it is that you are working on. So, yeah, that about wraps it. So, have a great week, everybody. And I will see you on another video. Bye bye.